All right, so I was just getting my hair cut and I was talking to my barber and he literally said to me that the next time he and his friends get together to do drugs, they're going to decide what companies they're going to invest in. And I was just thinking, oh my gosh, it's time I make a video about how to invest on easy mode. So super simple, straight to the point. In this video, I want to show you different ways that as a beginner investor who wants to start seeing your money grow and you want to start putting your money to work, but you don't know really anything about investments, you can kind of dip your toes into the shallow end and stop wasting time, because you know this, time is money. And the longer you sit on the sidelines thinking, I don't know anything about investments, or I'm not smart enough, or I don't have time enough to look into what companies I should invest in, the longer you're going to sit there and not make any tendies while everyone else makes tons of tendies. So without further ado, let's just jump into this video. Okay, like I said, seriously, my barber really did say that, and hopefully he's not watching, but I really do love the guy. I think he's awesome and it's really fun to talk to him. But it's interesting because he's a little bit younger than me. I'm 28 years old. I think he's like 22 or 23. And I always thought investments are for people who have a ton of money, people who have tens of thousands or hundreds of thousands to invest. But really, any amount of money that you can put to the side is a good amount to invest, because that will multiply, whether it's 10% over the year, or if it's 100 or 2 times or 300%, whatever it is, that money can grow. And if it's just sitting there in the bank account anyway, you might as well move it. I've always been somebody who saves money, and so it took a really long time for me to move from I'm putting money in the bank to sit in my savings account to I'm putting money into investments because it's going to be sitting in the bank account anyways mindset. And that has changed my life hugely and has led to some really, really juicy gains. So my barber says he's going to go with his friends and decide on what stock to purchase. Now, what I wanted to say is, if you don't have any clue and you keep saying, I'm going to wait until whatever to invest, one of the easiest things to do is to just set an auto buy up. And this makes it so that you don't have to be emotional. You don't have to decide whether or not now is a good time. You don't have to think, oh, that's a lot of money, I have to pull $500 out of my bank account. Instead, set a reoccurring monthly purchase up so that whatever amount of money that you can kind of forget about and it's not that big of a deal gets taken out of your bank account and invested into whatever you think is good. So for example, $50 a month, you have that auto pull out of your bank account and it purchases whatever, whether that be a big company that you really think is great like Tesla, or if it's an ETF that you think is really great, which is, an exchange traded fund, which is going to cover a broad index of a bunch of different companies, something like, the VOO or ARK Investments, something like that. We'll get into that in a second. Now, the reason that I say an auto buy is so helpful is because the other barber heard us talking and came over and said, oh, one of your biggest holdings is Tesla? How did you do, man? I got crushed in Tesla. I lost a bunch of money. And I was like, what do you mean? What? And he was like, well, what was your buy-in price? And I was like, well, it was around 300, 350 pre-split. And so that means that it's about 3 or 4 times since then. He was like, holy crap, man. Well, what I did was I bought Tesla at, I think he said it was 700, 750, something like that. And then a week later, Tesla went down into the 600s and he immediately sold. And I was sitting there like, oh no, man. I mean, I get that, right? Emotionally, that makes sense. You started to lose the money that you've worked really hard for, and so you jumped out. But once you get more experience in investments, you realize that when things dip, all that is a momentary dip. It's going to come right back up over time. And if you have any extra money, that's just a buying opportunity. If you already believed in the stock, that just gives you a discount to buy the stock cheaper and bring your average buy-in price down. Now, I'm not telling you this story to make fun of this guy. I'm just saying that the average person really has the same kind of psychological profile, and a lot of people do sell when they see their money go down a little bit. Now, if you look at the stock market in general, since the very beginning of its inception, it's gone up over time overall, right? But in between those times, during months, it's gone up and down. And so you could have bought here and then crashed 20%, and you're like, oh no, I lost all my money. But if you bought at any point in the past 60 years and you held till now, you would have made money. Even if you bought and then it immediately dropped 30%, if you waited a few more years, then it would be above your position. So one of the really, really good quotes, I think it's Charlie Munger who said this, I think is so good that everybody should learn and listen to, is stock markets, crypto markets, investments in general are a vehicle of transferring wealth from the impatient, to the patient, meaning that people who buy and then sell a week later because they got emotional are selling that to the people who have been adding to their position every single time that a stock or a crypto or an investment dips. And the people who are doing that, who are buying the dips, are thinking about a year, 2 years, 5 years down the line. Now, there's so many different things I want to say, but the last thing I said to my barber was set up an auto occurring purchase, because if you sit there waiting to buy Tesla, for example, in a year from now, when you do decide to buy it, you're going to have to go, oh man, I'm going to have to pull out about 600 bucks. That's a lot of money to pull out all at once. Or you start putting in $50 a month. You barely even notice it because what is that? Like a night out at the bar buying a bunch of beers and nachos. So you just skip that once a month. You don't even see it come out of your bank account. And a year from now, you'll have $600 that you invested in Tesla or whatever. And if that Tesla performed well, say it does 2 times in a year, then your $600 is now $1,200. So not only do you not have to pull out a bunch of money later on, you barely noticed your investment at all. Plus, now you have an amount of money that to you is like crazy. You're like, whoa, I would not have put $1,200 into Tesla because that's a lot of money all at once, but you only put $600 in. You saw it increase over time. This is the best tried and true method of investing without getting your emotions tied up into it. Dollar cost averaging over time and staying patient with your time horizons, basically saying, I'm not pulling this out for at least whatever, 2 years, 5 years. That's the best way to make money. I know I'm ragging on these barber guys, but the other barber guy who lost money on Tesla I said, why didn't you just hold it in there? You would have by now already been in the profit. And he said, yeah, but I want to make money in 2 weeks. And I was like, oh no, man, that's so impatient. I understand, right? I was like, but you're on that gambling time, man. You're like on that buy some GameStop, make a million tendies in a week type of deal. But I'm like, mostly that's just gambling. You're going to lose money. If you just stay patient and you really choose things that you think are value plays, you're going to do great. So let's move on into how you can invest if you don't know anything and you don't want to learn about anything. So like I said, you can look into companies that you think are value plays, that you think over 5 or 10 years are still going to be around and are going to be doing really well. I know I've said Tesla a million times. I believe in Tesla. That's why I bought a while ago. I also believe in Virgin Galactic, which is space, SPACE. I believe these companies are going to be around and also going to be doing better than ever in 5 or 10 years. So my time horizon is to hold them for a really long time. You can look at other companies and basically say the same thing. Are they small and medium, and are they going to keep getting bigger? Well, if you buy some now and you really believe that, you stay convicted, even if they drop, you just buy more, and over time, in 10 years, 5 years, they're going to do really good. You're going to make a good amount of money because they're small to medium right now and they're going to get huge. Now, I know for a lot of people, you don't have time. It's just not something you're interested in, but it is frustrating just having money sit in your savings account making 0% every single year. And so you just want to quickly decide what to put your money into on a monthly recurring purchase. Now, this is where the beauty of ETFs or pie charts come in. So if you invest with a company, a broker called M1 Finance, this is actually really cool. I have a link below and they give you a bonus and everything, but you can check that out and sign up. They make it really simple for people who literally don't have time for it and are beginners. They basically have these pie charts, which are basically their broker agents or people who do really well on the app will make these pies where it's like 8 different companies that are all involved in the solar sector, or 8 different companies that are all involved in automotive or whatever the genre is. And they weight that pie chart with those different 8 companies or 20 companies or whatever, right? You can go on there, you can look at the pies, you can see how they've performed over the last 6 months, year, whatever. And you can say, you know what? This pie chart is about solar, or it's about veganism, or whatever you're interested in. I think all those companies, I think that sector is going to grow over the next couple of years, and I don't really know anything about it, but this has performed really well. I'm going to choose this pie chart, and I'm going to auto invest $100 every single month. You just set it, you forget it, and invest $100 a month. You have $1,200 at the end of the year that's invested into vegan startup companies, and then if they did well, you have a lot more money. Super simple way to get into it. M1 makes it really, really simple. Now, if you're not using M1 and you're just wanting to use whatever broker you're using, Robinhood, or I use Chase sometimes, TD Ameritrade, whatever it is, there are things called ETFs. These are exchange traded funds. These are funds that are made up, weighted of different companies, and you can buy just that one ETF and you'll be exposed to all the different companies that are held by that ETF. Now, some of the most common and low risk ones are, for example, like the VOO, which is the Vanguard ETF, which is just basically the S&P 500, which means it's just all of the top 500 companies in the US. These are the companies that have the biggest market caps. These are the largest companies in America. And so overall, if the entire stock market does well, then that ETF will go up. So this is a great way to be broadly exposed. That way, when some things go bad, like the tech sector has been really hit lately, sure, some of those tech stocks will bring down that ETF a bit, but a bunch of other companies are doing great, like cyclical stocks, like things that are reopening stocks. For example, things like like airlines and cruise lines, things that are reopening are doing really well. And so the bad ones kind of took the ETF down, but the good ones brought it up. And so overall, the whole market did pretty decent and your ETF did good. Now, these ETFs, because they are such big companies, they are very low risk in terms of other just picking a stock or other ETFs. And so the returns aren't going to be crazy. You're not going to make 2 times in a year, but a lot of these ETFs will average somewhere around a 10 to 15% interest rate, basically a profit rate every single year. And so that basically means if you put $1,000 in, you would have an extra 100 at the end of the year. That adds up over time. If you did 1,000 every single year for 5 years, you have 5,000 of your own money invested. And then every year after that, you're making $500 back just for sitting on that. That's freaking beautiful. That's amazing. That's a good profit. That is one of the simplest, easiest, and also kind of lowest risk things you can do in the stock market. Now, what I like to do, because I do have a bit higher risk, and this is something that's really awesome for people who, again, maybe don't have investing experience and aren't interested in learning about it, but you aren't scared to have a little bit of risk. You can invest into other ETFs. Like one of my favorite is the ARK investment fund. ARK has a few different ones. The one I like is ARK-Q, but ARK really focuses on technology and future sectors, basically things that are going to change the future of the world. ARK-Q specifically works on autonomy. So these are things like they have a good amount of Tesla in there. They have different companies that are working on robotics, different things like, for example, robo-taxis or machines that are going to take over certain, simple jobs, because a lot of companies will be purchasing a lot of those machines to maybe flip burgers at all of their restaurants, things like that. And so I think in ARK-Q, they have over 15 companies in their exchange traded fund. And so for me to do the due diligence of learning what companies are going to be the best and investing in them individually, 1, I don't have time for that. 2, I don't have expertise for that. 3, I just don't have enough money to put a meaningful amount of money into each of those companies. And instead, I can invest just in ARK-Q. And as the whole sector rises, that ARK-Q fund rises as well. Right now, I think ARK is somewhere in the 80 or 90s range. And basically, it's another one of those things that you can just set it and forget it. You can set up a $100 purchase of ARK, let it keep buying every single month for a year. And by the end of it, you'll have a meaningful amount in there. And also, as future tech stocks do well over the next couple years, you're going to see that money grow. Okay, I started this video because I really just wanted to make a quick video, just really quickly explaining to people how they can get invested without having any knowledge. And I realize now that I have kind of rambled on because I'm really excited about this. And it makes me sad when people don't know how to make money and they think that making money is only for people who are really rich or who went to college or whatever else. If you have any amount of money, even if it's $10 a month, that can really add up, because everything is basically a perspective. And if $100 extra a year for you is a lot of money, then why don't you want to make that? And especially if you can put 5, 10, 20, 50 bucks aside every month, even if you lost it all, who cares? You learned, you gave yourself potential to change your position of where you are in life. And it just sucks that so many people just aren't really into it or scared or just feel like they don't have time to learn. So I want to make this really quickly. A recap again, set up an auto purchase, an auto buy, a reoccurring purchase every month or maybe every week or every 2 weeks, whatever the time limit is, of an amount of money that you can put aside that you aren't going to be terrified of having come out of your bank account every single month. Set up an auto occurring buy. Either use M1 Finance and use a pie and just invest in that pie, or find an ETF that you really like VOO or ARK-Q, and set up the recurring buy for those pies or ETFs. And other than that, that's pretty much it. That's my advice for beginners. It's easy mode. You don't have to think about anything, but over time, it's really going to add up to something meaningful. And it's a great way to get exposed to the market without knowing literally anything at all. So there you go. I hope you guys enjoyed this video. Again, check out M1 Finance in the description below. If you want to check out a broker that is not just pie charts, where you can actually choose individual stocks or individual ETFs, you can also check out Webull. I know they have some bonuses as well. I'll put a link in the description below. None of this is investment advice. I'm just helping you learn what I've learned, not telling you what to do. I'm just trying to expose you to some of the things that I've learned over the last couple of years that have changed my life. So I hope this was helpful. If you did like this, let me know what you thought in the comments below. Let me know what other kind of videos you'd like to see, and let me know what your favorite ETFs and stock picks are, what you think is going to do good over the next couple of years. And I appreciate you coming in here. Subscribe if you're not subscribed already, and I'll see you beautiful people in the very next video.